What up? What up? All right, let's go over Monday. I don't think there was anything too good on Monday. Yeah, what am I supposed to say about this, man? This is terrible. Ew. I guess the 1 minute long, but this was a break even. I don't know. What did Dodgy take? Oh, he took a loss. Um, hmm. Oh, wait, this is Tuesday. Wait, I thought I clicked on Monday. Okay. Monday. Yeah, Monday was the NFP candle. Or not the NFP candle. What am I saying? The Trump news candle. Um, Dude, Monday was really bad too. Jeez. Yeah, Dodgy took a loss on Monday too, so oh, that's right. Yes, it's the 1 minute long that I alerted. That's right. Okay. Well, this is the long. And you can take profit, wherever. Or it gets break even. But yeah, this was good. We ran out sell side here. A plus long. Will I record this? Yes, I will. A plus 1 minute long. We have a 10 a.m. reversal. EISD plus iFVG. Singular gap, mid momentum, macro, good ish V shape. Um, Good break even. Anything else? Discount. Yeah, it's good. Retracement after. Actually, no, this is good. This is actually just a good reversal setup. Reversal setup. Okay. I already said that 10 a.m. though, so we're good. All right. That's going to be trade number one. If you took this trade, good job. This was a good long. What up, Vignesh? All right, let's go to Tuesday. Tuesday, I think there was nothing. I'm gonna be honest. So Tuesday, nothing. Wednesday we had this short. What else did we have? What did Dodgy take? What the hell did Dodgy take? He took these shorts. Dude, that's crazy. Okay, so if he took these shorts, we are actually gonna say this is the play of the day. Even though he's gonna hate it because we missed this internal high. But trust me, we don't need this internal high because we're inside of a 5-minute. We can target the low there, or we can target all the way, which we'll just say we targeted all the way for 300 points, because why not? Actually, I usually do like this. In macro, singular gap, delivery from 5/15 minute, 50% retrace, second leg of distribution, CISD plus iFVG again. What else? Lows. What are we saying is the draw here? Like, just like stacked liquidity. Anything else? Premium? Yeah, this is good. This was a really good short, guys, if you took this. I'll just do that, I guess. Wednesday. Okay, so I'm going to show you guys real quick why you don't need that last little 1-minute ITH before taking this trade. And I talked about this with some mentorship students as well, so you guys are going to get some mentorship level education for free. But the key is with any trade you take, you're not looking for perfect, you're looking for good enough. So if there's enough qualifiers in your trade, like we're in the macro, singular gap, good delivery, 50% retrace, premium, we still have good draws and liquidity below. You don't have to be like, oh, but there's still a 1-minute high here that we didn't sweep, right? Because, and this is the key, in a typical case where, like, let's say we don't get delivery on this trade because we missed the 2-minute or we missed the 3-minute or whatever it is, right? That would be bad, right? Because then we don't really have good delivery. But if we go to the 5-minute here, not only are we inside of the last gap to deliver us, right, after we've retraced to balance it, but this was an IO-Fed reaction in live time, okay? IO-Fed stands for Institutional Order Flow Entry Drill. It's basically when price soups a fair value gap. It's a sign that price is very bearish and wants to trend in a certain direction, or vice versa for bullish, right? If we barely tap into a bullish gap and then react kind of like here, very bullish, we want to go to the next high, okay? So we have that kind of a reaction, and we're inside of a 15-minute. So I'm not going to let the fact that a 1-minute ITH has been missed disqualify this trade, okay? After it's just so perfect in everything else. Okay, so that's number one reason. Number two reason why I'm saying this is the best trade of the day is because, I mean, it was just perfect in terms of delivery. Pre-market, this 1-minute short I actually also took. I didn't think this was bad, but it's too small. Like, this in comparison is way better as far as the entry model goes, and then the rest of this is just fine. But this is a good short too, if you were asking about that. Okay. Macro is just the 10 minutes before the hourly close and after the hourly open. So 9:50 to 10:10 in the morning, 10:50 to 11:10 is the last macro of AM, and then in PM it changes up a little bit, but you don't trade PM, it doesn't really matter to you. Okay. The reason why this is an even important time is because usually this is where we see PO3, okay? Power of 3 is how most candles will print. Open, high, low, close. If we look at this 4-hour candle open, which opens right at 10 a.m., you can see price opens, has a high that gets put in, distributes down, puts in a wick, and then closes, okay? This is very typical PO3, okay? That's why it's important. We usually see reversals in, the new higher time frame candle print during the macro time, okay? All right, Thursday. Oh, we're on Friday. Thursday is like here-ish. What did Dodge take on Thursday? 716. You got break even, and then he got the short off open. It looks like. So we took, what was that, the 30-second there? All right, we're saying it's 30-second short. These equal highs don't matter because the equal high is formed at a non-swing point, okay? We want our equal highs to be formed at swing points. We also have a data low below, so that's pretty good. Alrighty. A plus 30-second short. Premium. Singular gap. T-shape. Data low. Raw. Good break even. Good momentum. What else? OB plus iFVG, so we get that confluence there. I think that's it. Okay. That's good. That's good, I think. How important is OB to me? It's just the something that adds to the confluence. So I have like a list of like all of these different confluences that you can have for a trade, and this ranks somewhere like around, I think, number 4. In order it goes liquidity sweep, delivery, price action / momentum, and then it's like supporting PD raise. So it's like the 4th best confluence for an entry model. Delivery from, let's see, was there a 15-minute, I think? Or 5-minute? Yeah, it was 5-minute. Okay. Still a good trade. I remember this one live time. This was really good. Guys, guess what? Today I'm gonna get my car tinted. Not my car, my girlfriend's car. I've already had my car windows tinted. Tint is a secondary offense, so I will not be pulled over for tint in the state of Michigan. Isn't that fantastic? How do I, what just happened? I think my chart is locked. Oh, wait, we're good. We're good. We're good. All right, last trade. Friday's trade. What are we saying? The 30-second short? The controversial 30-second short? Did I take it? No, I didn't get on the charts actually that morning. I was running errands, so I missed all this. I actually ended up taking a short in PM. Yeah, I can show you guys what that looks like. It was a very nice trade. Uh, so I said at 142, I've been trying to catch the shorts. Wish me luck. Got stop break even once, twice, and then took a loss. And then I ended up getting in there. And the only reason why I took this loss, this should have been a break even, but I just held the trade stupidly. And then there was this continuation. But I took this short with 5 micros, held it for 114 points, and ended up taking full profit at that low. This short during PM yesterday was just absolutely insane. I made like almost 5K on this. It was the 3-minute short up here. It was after all of these. But no, I called out 250 points on Thursday, and we'll go over that too. But yeah, this was the short that I took on Friday to target these lows. It was really more like based off of what ES was doing, but yeah, I thought this was really good. Probably like an A setup, not A plus. Um, but yeah, I figured this would be at least good to the break even down here. There was an unfilled 15-minute there, and I was just kind of hoping that price would continue to trend down. And this looked like potential market maker sell model reversal. So we had accumulation manipulation down, distribution up. And then when we distributed, we got stuck at this 4-hour gap. And normally, if we're going to reject from a higher time frame gap, we're going to see a reaction like this when we get up there. So this is starting to look like 3 drives to me when we took this. So we have like first drive, second drive, third drive. And then we couldn't make a higher high after that. And so this is when I started to really look at like, okay, wow, this could really be our reversal. Because we were just stalling so hard at this 4-hour. And one key thing that I think a lot of beginner traders don't understand, but you'll get it if you're an advanced trader. You never want to let your past trades influence your future trades. As long as your conditions are still set, if the price continues to give you opportunity again and again and again, it doesn't matter how many break evens you took. It doesn't matter if you took a loss. If your conditions are still there and everything still aligns with your trade, you can still enter trades. So that's how I knew. Like, for me, I still had everything that I wanted for this position. And of course, like as you get more and more break evens, you want more and more confluences to align with your trade. And the key thing here for me and why I ended up taking the 4th trade here was the fact that this death candle formed when we got the inverse. When we got this much momentum down, giving us the inverse of the gap that was holding us, I knew at that moment that, okay, this was going to go to the low and then that was going to be a free trade. The fact that it didn't resweep the high didn't really affect the setup too much because we were delivering from the 4-hour. And I wasn't really expecting price to make higher highs here because we'd already gotten like 3 drives and price was really slowing up a lot. Really what carried this trade was this candle. If this candle hadn't formed the way it did, I probably wouldn't have taken it. Like if we'd grinded down into the inverse on the 3-minute, I probably wouldn't have tried it. I would have given up. But this candle sold the trade for me. Like this was like, wow, that was really good in live time. And then we got this inverse here, which was good. And then this 30-second inverse short with the low still intact was also really good. And I called this out in the PM chat. I was like, this would be nice if we got it. And you probably got break even on this, but you don't have to go break even because there's no roadblock to the left here stopping price. And that ultimately worked too. So that was cool. This was like 45 points or something with about 40-ish points of risk. So 1-to-1 there. 15-second short on Friday at 10:30. Probably not good. I wouldn't have. Yeah, okay, so I'll talk about this, but yeah, I probably wouldn't have tried anything here. What were we saying was the play of the day for Friday, by the way? The short? Oh yeah, the 30-second short off open. Right. I didn't even do that yet. My bad, guys. I got distracted. Okay, so this short is the play because we had all this liquidity on the higher time frame still here. So this was the draw. Okay. A plus short 5-minute delivery. 30-second V shape. Wait, I'll just say V shape. Singular gap. Good momentum. Discount. So we'll actually make that A. What else? Not macro. Swept. Liquidity. I think that's it. Higher time frame relative equal lows. Raw. Anything else? That's it. Yeah, this was a good short though. A controversial short. Okay. Can I please speak a little slowly? Yes, I apologize. I do talk kind of fast. Which liquidity did we sweep? we swept this, I would say. So these like 1 minute highs. We didn't end up sweeping these highs. I know you guys are gonna ask about this like LRLR, but to me this isn't really LRLR. It's not that good. It's like C tier LRLR. And then as far as the relative equal highs go, do you guys know what's even more important than lower time frame relative equal highs? Higher time frame relative equal lows. Yeah. So that's why I don't think these matter as much. You wanna focus on the um best drawn liquidity on the chart. And right now that is the higher time frame relative equal lows. What is a singular gap? It's instead of there being multiple fair value gaps in a single leg in a single dealing range, there's multiple. Okay, so that's series. So a singular gap is when we only have one fair value gap in a price leg or in a series of bullish or bearish candles, right? So this is a singular gap. This is a singular gap, right? What else? Uh, these are two fair value gaps, so this would be gaps in series, right? Not singular, right? There's two of them. This is our price leg here, right? Low, high. There's only one fair value gap on this price leg, so this is a singular gap. Okay. Glad you got it. 15 seconds short at 10:40, not 10:30 on Friday. I wouldn't have shorted, so I'm gonna give you guys the sauce, all right? Yeah, no, I'm good. I mean, cool. It's a pattern trade. Very nice. Swept the high, singular gap, reversal. Very nice. But I don't really like it. Okay. Here is the sauce that's going to make you the best trader ever. Okay. We're looking for two specific conditions whenever we're taking a trade. Okay. Condition one, price has taken one side of liquidity in the form of a manipulation leg. We are now targeting the opposing liquidity. Okay. What am I? Opposing. There we go. Okay. This is situation number one. Okay. You've heard this from everyone. This is, I'm pretty sure, like the PB model. This is like everybody's model, right? We wait for one side of liquidity to be swept. We target the other side with an inverse. Okay. Now, this is your distribution leg. Okay. On this distribution leg, we are going to create inefficiencies most of the time, okay? Usually on the 5-minute, usually on the 15-minute, okay? Scenario number 2 is on the distribution leg, we create, if there are inefficiencies, you are going to look for a retracement to target them, okay? So let's look at this morning on Friday. We have our Judas swing up, right? This is our manipulation leg, let's say. We manipulate the highs. We know it's a manipulation leg because price either taps into an inefficiency or takes out liquidity. And that can be lower time frame liquidity, higher time frame liquidity, doesn't matter. Then we get our distribution leg to the downside, okay? On this distribution leg, we form 5-minute unfilled gaps here and there. And we don't form an unfilled 15, okay? So these are inefficiencies we create. On this price leg back up, we're going to look for a long okay? And we get it, right? I don't know what this is. We get it, okay? This is your inverse play that you can take long to target the inefficiencies. After price has taken liquidity and balanced the inefficiencies, you're done trading for the day, okay? That's it. Unless we have more liquidity to target, okay? Unless we have, obviously buy side above or whatever. But in this case, price took out London high here. We kind of have buy side here, so you could have held this trade longer. But the idea is if none of these ideas are present, like if we've already taken out both sides of liquidity and we've retraced to balance the distribution leg, then there's no trade to take, okay? It's going to be low probability. For example, let's go back to Thursday, okay? Thursday, we kind of get this idea. Price has a Judas swing up here, okay? We run out this buy side here, this high inside the gap. We reject the 5-minute. We start to distribute down, okay? We run out sell side, okay? Here's our sell side level from Monday, okay? That gets taken out on Thursday, okay? Down here. After price takes out that sell side level, we can look for longs, okay? Because let's take a look. What do we leave on this distribution leg down? Okay. We leave behind an unfilled 15-minute fair value gap. Okay. So we're going to look for longs to get back to that 15-minute gap, which starts here. And we get this inverse here. Okay. You try it, you get break even. And then we get this inverse here. Try it, go break even at the high. Maybe you get break even, right? But what's key is we actually, it looks like we kind of end up creating the 15-minute there. We get it. So this is the entire gist of every single morning session you're going to get. Once prices came back to the 5-minute gap here, to the 15-minute gap, you're done for the day. Because what happens after? Is this clean price action to trade? Would you guys want to be trading in this? Okay. So that's why. That's why this is the sauce. Because after scenario 1 plays out and scenario 2 plays out, you're going to stop trading until we generate more liquidity. Because every single time after both scenarios plays out, it's going to be lower probability conditions. You're going to have low bias qualifiers. You're going to have less, high probability entry models. And then that's pretty much it. What up, Luxano? Did I take anything in PM on Thursday? Yes. So Thursday was my kind of PM session of the week. And this doesn't necessarily apply as much to PM, by the way. This is more just for AM. In PM, it's similar, and I'll talk about that with PM people. But yeah, this mostly applies for AM. Okay. So for PM, the trades we took were the... Wait, it wasn't from Thursday, was it? I lied. It was from Wednesday. Okay, so Wednesday was our really nice day. So on Wednesday, PM took this 15-minute long here. Okay. And we took this till this gap here. Okay, this was also the start of, I believe... Was there a 4-hour? No, there wasn't. Okay, so it was just a 30-minute and the 15-minute here. And my goal with this trade was to get at least 1R out of it. And if you would have taken it from the like actual full-on stop loss, this would have been a 1R trade. But there was multiple ways you could have had your stop trailed so that like you didn't have that big of a stop loss. So you have these order blocks here plus a fair value gap, which should hold. And if you're really conservative, you can even have your stop loss below this order block plus fair value gap, because realistically, this shouldn't break if we're bullish, right? And we're just going to continue the uptrend. So I wanted to alert this because I wanted to get a trade out on this session, and I really thought that this was just going to distribute higher. And if you look to the left here, there's like no roadblocks on the 15-minute. There is a tiny one on the 5, but I didn't think it would matter since we V-shaped as hard as we did. And then we were also delivering off of this hourly last gap in the leg. So I just figured we would pull back to this unfilled hourly gap. And this was basically the whole idea behind this trade is I didn't believe we would head lower and cause this setup to fail before coming back to the unfilled hourly at this high. So that's why I figured it was a good trade. It was just going to be a free break even. And I thought it was kind of worth the risk there. So this was nice. And then, so this got us 130-ish, 140-ish points. And then the last trade we took was, I believe it was a 3-minute short. Yeah, it was this 3-minute short here. Right? Oh, no. Sorry, not the 3-minute. It was the 2-minute. I lied. So 2-minute short here. The reason why we're not looking at the 1-minute is because it isn't singular, but this 2-minute is. So when price closes below the 2-minute here, I entered short. And the goal of this short was to target the devil's mark here and the last 15-minute gap that we created here. And this also kind of, I think, aligned with 50% if I remember. So a lot of reasons for price to pull back. Kind of. This gap aligned with 50. So I figured we'd come back to here. And that was the target, and I said to take full profit there. But yeah, the main thing was this devil's mark or flat bottom candle. And the reason why is it goes back to PO3. Each candle has to have a wick on it. And so if we leave behind a wickless candle, we'll usually come back to that price level. And so this just seemed like a good draw on liquidity at the time. But yeah, I liked the reaction that we had to the for value get that we tapped into here on the 15-minute, and it was the last 15-minute gap in this leg, and we left behind a lot of inefficiencies. So this kind of goes behind like that whole like, okay, accumulation, manipulate down, price taps into the inefficiency. We get our distribution leg, okay? And then, so this is all scenario 1. We're just playing the distribution leg. And then scenario 2 is, okay, now that we've gotten the distribution leg, we've left behind these inefficiencies, price comes back. So even though I'm not depending on it so much for PM, we still get an opportunity to kind of see that play out in PM where we get our distribution leg and then come back to balance the inefficiencies. Okay? And that's it. So that's going to be iFVGs of the week. Any questions? I just trade with Tradeovate. Honestly, I'm kind of in a weird spot. I don't really know how much to risk on my fundings right now. Some of them I have a bigger buffer on, some of them I don't. Traditionally, I've always just risked like between 150 and 200 per trade when I'm starting out an account. What I think is actually pretty important to share with you guys is actually my Tradeovate risk settings. I think those are pretty important. So my DLL per day depends on the account. Right now on the accounts that I have more of a buffer on, which is 3K, I have an $800 DLL for that. And then on starting accounts, I have a 600 DLL. And then I auto lock out after 2 winning trades or 2 losing trades. So that, I mean, or actually that's not an auto lockout, it's a manual lockout. Okay, per session. Okay. These are good risk settings, and then I risk about 200 per trade. Do I always wait for the higher time frame iFVG to inverse on a price swing? Not always. If there's an A+ draw, I will sometimes take the first inverse. Yeah, Theodore. So if you're taking an inverse play that is running into other fair value gaps, that play will usually get wrecked. If you take an inverse play that's like a long and premium or a short and discount, those plays usually get wrecked. I don't really try and predict what's going to happen in the following week because a lot can happen during Asia session. So I'll probably put something out on Monday before open of what I kind of am looking for as far as the dream scenario. Why'd the 15-minute on Thursday fail? Let me see. This long here, I'm guessing is what you're talking about at 11:15, or maybe not that. Maybe this long at 3:45. I wouldn't long at 3:45. Oh, no, 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 it's definitely this. My apologies. I see it now. Why did this fail? All right, well, let's go back. I would say it's because we got our distribution leg, we've retraced. This is just going to be bad price conditions after this. We have to accumulate more. Um, and this is just like not ideal. Trust me, if you try trading after we've gotten our distribution leg and the retracement, you're going to get wrecked most of the time. Just don't do it. That's like that's the main reason why. Maybe it's also the fact that we're holding the 1 hour bearish gap here. So this is our significant gap. This is what price has reacted to several times. Whereas the 15-minute here never had any sort of reaction, right? Usually gaps that are going to matter more are going to be ones that have been tested and have caused price to either make a lower low or make a higher high, or that have held price for a significant amount of time. So think about, like, for example, the 3 minute that I took short from Friday. That short had a significant gap that we inversed because this gap not only made price push up and make a higher high, but it also held price for a decent amount of time. So when this breaks, it's going to tell us a lot more about what price wants to do. It's kind of like a better gap that we use to tell a story about what price wants to do versus a gap that like hasn't really done anything. Another significant gap here is this gap. We deliver from it, make a higher high. Another one is this one, right? But these gaps here aren't that important, right? Because they get ran through immediately. Okay. They don't cause price to head lower. We're not respecting them for a while. There's no history. So like we expect these gaps to get inversed. And then even if they do get inversed, they don't really tell us a lot about like order flow. So what would tell us more about order flow here is if we got like a CISD, which we end up getting. So that tells us obviously that price wants to head higher. But in this scenario here, if we look back at that 15-minute you were talking about from Thursday, that inverse didn't give us a. Did it give us a CISD? It actually did. So yeah, this was just unlucky. I would say this is just an unlucky loss. Um, that's all it is. Sometimes iFVGs lose, so be risk managed. So that way if you do lose, you can end up making it back on a future setup or whatever. Okay. What indicator am I using? I'm using a lot of different indicators. The new week opening gap, equal highs and lows, ICT kill zones, and this FVG matrix, which shows me unfilled gaps. Pretty cool. I don't have a video explaining that K, but I should. I should make a video. Uh, I'll share that one. So this one was made by one of the people in the community called Apuff. It's pretty cool. I like it. All right, guys. I'm gonna wrap up here. Thank you for tuning in. Hopefully your team wins for the World Cup. Today, obviously England and France, and tomorrow Spain and Argentina. Um, and I'll catch y'all Monday. All right. Peace out.